All right, let's talk about Beyond Meat stock. We've got a really interesting situation here. A massive one-day surge that seems to come out of nowhere, right in the middle of a pretty brutal year-long collapse. So the big question on everyone's mind is this for real? Is this the start of a comeback, or is it just a blip before things get even worse? Let's break it down. So check this out. On a recent trading day, Beyond Meat stock just exploded, jumping over 7% on some seriously heavy trading volume. Now, after months and months of just bad news, this was like a bolt of lightning. What on earth caused this? And, the more important question, can it actually last? And that's really the million-dollar question, isn't it? I mean, when a stock that's been beaten down this badly all of a sudden pops, you have to wonder, is this it? Is this the bottom, a real sign of life? Or is this what traders call a bull trap? Something that looks good, sucks in hopeful investors, and then the floor drops out again. That's what we're going to try to figure out. Okay, so first things first, let's dig into this rebound. To really get a handle on whether it's legit, we have to look at where it came from and what was happening around this sudden jump. So the stock closed at $1.08. That's that 7% gain that got everybody talking. But here's the thing, you have to zoom out. Look at the 52-week range. This stock has been as high as $7.69 and as low as 93 cents. So that 108 close, it's still basically scraping the bottom for the year. Even after a great day, this thing is still in a very, very deep hole. So what was the spark? Well, it came from the company's third quarter earnings report. They announced they'd actually narrowed their net losses a bit. And here's the crucial part. They gave stable revenue guidance for the next quarter. In a market that was bracing for the absolute worst, hearing the word stable sounded a whole lot like good news. And boom, that was all it took to light the fuse on this rally. But here's where it gets complicated. That one day of good news is running headfirst into a wall of some pretty troubling data. Let's switch gears and look at the technical indicators, because this is where the warning signs are just flashing bright red. And before we jump in, let's be clear on what we're talking about. The easiest way to think about technical indicators is like a doctor checking a patient's vital signs. They look past the daily mood swings and measure the stock's real underlying health, things like trend, momentum, money flow. And for Beyond Meat, well, let's just say the patient is not looking so hot. And this table really just lays it all out. The trend indicators, they're screaming that there's a strong, established downtrend. The price is way below its key moving averages, which means it's running slower than its average speed. What about momentum? It's negative, and it's actually getting worse. And maybe the biggest red flag of all, the volume indicators show that overall, money is flowing out of the stock, not in. It's just a sea of warning signs. This quote from the analysis really nails it. The big picture is one of entrenched bearishness. Basically, the sellers are firmly in control, and that's not really up for debate. But, and this is a big but, because the price is hovering near some of those shorter-term averages, you can get these sharp, sudden bounces. It's the classic signature of a bear market rally. Now, it would be really easy to look at all that red and just write this stock off completely. But that's not quite the whole picture. Buried under that mountain of negative data, there are a few little glimmers of hope, some contrarian signals that the bulls are clinging to. And this slide really puts that conflict front and center. On one side, you've got this powerful, months-long downtrend, negative momentum, money leaving the stock. It's a tough look. But on the other side, you've got these interesting little clues. The stock is technically oversold, you've got some weirdly positive volume signs, and of course, that business news that has at least stopped getting worse. So which side is going to win out? Let's break down those positive clues. First, an indicator called the RSI says the stock is oversold. Think of it like a spring that's been pushed down and down and down. It's so compressed that any little bit of good news could make it pop. Second, something called the on-balance volume is positive. This is a subtle one, but it suggests that on up days, the volume is really strong, a potential sign that big investors are quietly buying shares. And last, this stock is just volatile. It's built to make big moves, which of course can go either way. Okay, so what we've got is this intense tug of war, right? A super strong long-term downtrend pulling one way, and these few hopeful short-term signals pulling the other. Based on the analysis, this whole setup points to three very different possible futures for the stock. So here they are. Scenario 1 is the bullish case. That compressed spring finally uncoils. The good guidance gives investors some real confidence, and the stock punches right through that key resistance ceiling at $1.21. Scenario 2, the bearish case. This whole rally was a fake out, a trap. the long-term trend takes over again. Sellers pile back in, and the price breaks below that critical support floor at 91 cents. And then there's the third option, the neutral case. The stock just gets stuck in the mud. It chops around $1.07, going absolutely nowhere, while the bulls and bears just fight to a draw. So, you weigh all this conflicting evidence, the awful trend, those little glimmers of hope, the three different paths it could take. Where does that leave us? What's the analyst's final take on all this? Well, the analysis boils it all down to one number, a technical score. And on a scale where 50 is perfectly neutral, Beyond Meat gets a 45.83. So that puts it clearly on the bearish side of things. It's not like a total catastrophe, but it definitely confirms that even with that one-day pop, the stock's underlying health is still pretty weak. And that leads us to the final word. Caution is the name of the game here. Sure, this rebound offers some short-term relief for investors who've been hammered, but the really big long-term problems, they haven't gone anywhere. The risk that this is just a trap for unsuspecting buyers is still incredibly high. Which leaves us with one last really fascinating question to think about. When a stock is trading this low, after this big of a fall, the whole idea of risk kind of flips on its head. So what's the bigger risk here? Betting on a turnaround that might never, ever come? Or is the biggest risk sitting on the sidelines, doing nothing, and potentially missing the absolute bottom on a company that somehow manages to pull it off? That's the real dilemma facing anyone looking at Beyond Meat right now.